We do have the FOMC minutes coming out here at 2 p.m. New York time, and there is expectation. So there's chatter, let's just say that, in regard to perhaps the Fed being a little bit more hawkish, perhaps giving more information in regard to what the order of events may be when the Fed does indeed start to unwind some of the stimulation that's been going on within the U.S. economy. That is what has been telegraphed a little bit by some rumors out there. Maybe they're true, maybe they're not, but we're hoping to see a little bit more detail, even more detail than what the Fed chairman provided on his comments during his press release after the FOMC meeting last. So in any case, we are seeing the dollar get a little bit weaker here against the euro versus US dollar, against the euro after moving in really an up and down kind of fashion here today. Initially moved higher, went and tested that 200-hour moving average, went lower, tested the 100-hour moving average, and now is up higher, testing the 200-hour moving average again. Now that 200-hour moving average currently comes in around the 72 level, and a move above that level. You can see we've gone a little bit above it, but we have not been able to take out these highs for the day. So the market has had this little rotation back to the downside. So we'll be watching that this afternoon. Break above this 200-hour moving average opens the door really for a further move up toward the 38.2% retracement of this move down from this high to the low. That level comes in at 143.88. It does not seem like that would be necessarily possible right now, but that is definitely a target for the euro versus US dollar. Let's head into the sterling versus U.S. dollar. This currency pair lost some ground on the back of some more dovish comments in regard to from the Bank of England in regard to monetary policy or expectations of monetary policy. As a result, we saw the sterling versus U.S. dollar move down and breach the 100-day moving average. This is the first time the market's been below that 100-day moving average since this date right here, going back to January 12th, 2010. So the move below that level was significant, but the market did run into other support against this trend line. This trend line came in around 90, 91 level. The low for the day came in at 161.04. So got within about 13 pips of that, and then started to move back to the upside. You can see that in the hourly chart here. I'm going to put a horizontal line in at that 90, 91 level. It goes all the way down to down to that right around this level, just to remind ourselves where that moving average comes in, and the market as you approach that level, then move back higher. Now we are back above this low from, I guess that goes back to last Friday's low, coming at the 161.45 level. That's going to be a support level as we head into the afternoon's trading day with the market trading at 65. We'll be watching this. We'll put a horizontal line in at that low there around the 45, 46 level, and that will be our support. Off the 5-minute chart, we are trying to move above the 100-bar moving average here. If we were able to stay above that 100-bar moving average at the 60 level, we could see a further move to the upside. Next target would be the 74 level. The following target after that would be the 88 level, and then the 95 level on the top side. All these are the Fibonacci retracement levels, and also this low coming off of this point earlier in the day, in the trading day. So those are our targets on the top side for the sterling versus U.S. dollar. Let's take a look at the dollar versus yen on the 5-minute chart. Is giving us a nice little confirmation here. The 100-bar moving average is starting to move up. The market was above that. The market found support against that 100-bar moving average, and that provided a springboard to the upside here for the dollar versus yen. The move to the upside took the price through the 200-bar moving average and up to toward the high for the day. The high for the day has not been breached. However, that high comes in around the 53 level, and that will be our next target to the upside. I like the fact that the corrective move to the downside at this point right there here stayed above the 38.2% retracement, stayed above this low point right here as well, and as a result, we are seeing this a little bit move back to the upside. We will see if that momentum can continue, but all bets off. The price goes back below the 27 level. Look for a break at the 48th and then 53 level to lead to higher levels in the dollar versus yen. The next, you can see that's where we're going here on the hourly chart, and then above that is a 76 level. That's a high for the week in that currency pair. The dollar versus Canada had some better data come out, and also better oil inventories, crude oil inventories, and as a result, we did see the oil prices move higher and dollar Canada move lower. We are approaching this 100-hour moving average. 100-hour moving average comes in at 97.01. The current price is trading 13. The low for the day has come in at 07, so we did find some early buyers against that low and against the low for the day. So this is going to be a key level. Not only does it correspond with the 100-hour moving average, but it also corresponds with the low for the day, which came in at around the 05 level. 05 to even is going to be our key support in the dollar versus Canada. Move below that level and look for further selling pressure with 85 and the 200-hour moving average at 58 being the next target levels on the downside. Finally, take a look at some of the precious metals. In particular, take a look at silver. Silver on an hourly chart was showing nice signs, just like the dollar versus yen. We saw the 100, in this case, this 100-hour moving average form a bottom here, start to turn up. We also saw support against that level. The problem on the top side was we had this trend line resistance coming in place, and the market couldn't get above it. This nice little narrow trading range when the market broke above this trend line at the 74 level, above the 80 level here as well. The market took off to the upside. Now has resistance against a 200-hour moving average at the 35.60. This is our target on the top side. The current price trading 35.50. So we are close to that target. Expect to see some profit takers against the 60 level. Those profit takers who are buyers against 100 now can sell against a 200. If the market breaks above the 200, look for additional buying in the silver toward higher levels. Off the daily chart, we saw this chart move to the downside, took over 61.8% of this move to the upside. This last move from the January low to the high. We are back above the 100-day moving average at 34.84. All these are pointing to higher prices here in silver. The problem is that 200-hour moving average. So you tend to run into these instances where you find resistance above, but then you have good support below, and good reason to think that the upside is the preferred way. I would look for offers against a 200, but look for a retracement that may come down to this level around about the 135 level, and for a rotation back up to the upside. So there you have it. Look at some of the major currency pairs and silver. This is Greg Wonklowski for FXDD.